Hello traders, Gary Wagner here just before noon in Honolulu. 6 o'clock in New York. It is Thursday, October the 5th, 2017, and this is the Daily Report for Gold and Silver. Continued concerns about the Federal Reserve raising interest rates along with the start of quantitative normalization, in other words, their asset liquidation, has really boosted the dollar and therefore put pressure on the precious metals markets, with silver taking really very little of that, closing unchanged at $16.61, but gold trading off by about $6.20, settling at $12.7060. That's all in light of a strong U.S. dollar, up 0.5% at 93.80. Traders, we do have gold trading moderately lower on the day off, $7.20, trading at $12.6960. That, of course, is basis the most active December's contract. We can see that in the single large red candle, and that, of course, comes following 2 days in which we had the potential to see this market recover. We had 2 green days, and we had some sort of support that sat roughly at these lows at $12.69. On today's move, it is almost entirely predicated once again on a strong U.S. dollar trading up about 0.5% on the day. When we bring in the Kitco Gold Index, we can see just how much influence the dollar has today. This, of course, being spot or physical gold, currently fixed at $12.67. The vast majority of today's downside move is directly related to a strong U.S. dollar. And traders, in terms of a price point and where our next real target is, we've talked about this. It is a 61% retracement of the entire rally. Our low today, $12.68. So we are still a couple dollars shy or just above our current target. And traders, in as much as the particular price point, $12.65 in gold, has to correspond to some sort of resistance in the dollar. As we know, the dollar has been in an absolute free fall for the better part of this year, finally hitting these lows beginning of September at 91 on the dollar index. 94 acted as a supportive area before springboarding off to the highs that it achieved at the end of last year, up at around 103. We can also see that as this market did fall down, it came down to roughly 92. It then traded back up and found this to be an area of resistance. In other words, strong headwinds from the same price point. And that's why over the last couple of days, I've talked about 94 as a key area to look at for some potential resistance in the dollar, which would coincide with a support area in gold. And traders, what can you say about a market that continually moves to new record high after new record high? Dow Jones Industrial Average trading at 22,775 points, up 113 points on the day, a net gain of about 0.5%. When we look at our weekly chart and uncompress it, we can see how dynamic of a move traders have witnessed this week alone in U.S. equities. The NASDAQ Composite also tracking substantially higher in uncharted territory. And then lastly, the Standard & Poor's, again, a weekly chart absolutely at a new all-time record high. And so traders, we have talked about our current target for gold, for support, our current target for resistance for the dollar index. And lastly, I do want to take a look at silver. Silver right now has been acting in a very similar manner to gold. We can see the distinct sell-off. We can also see, and by the way, this is a 2-day candlestick chart, but we can see an attempt at forming a base with these lows that have come in over the last 4 days, roughly at 1660, 1655, but I still believe that strong support in silver might not come in till about $16.36. Traders, my recommendation is to maintain our neutral stance, awaiting our next signal. Traders, on today's show, we spent some time looking at key levels of support, potential support for gold, and potential resistance for the dollar, because the two of them go hand in hand. Inasmuch as this market can be dissected technically, it is an event-driven market. And right now, what we are looking at is market participants using that sentiment to really bid up the dollar and thereby put pressure on gold. Therefore, our recommendation is to maintain our neutral stance with no active trades. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.